Right. So the few questions that had like popped up in chat were to either like understand how lows and highs hold, and the other was to just like recognize break structure, right? So these were the two topics that like I will be clearing up in this session. And let me see what the actual question was. It was from Pokemon Hunter guy himself. Like I think there was a chart that I wanted to refer to somewhere here. Can't seem to find it somewhere here. The chart itself represents the question Pokemon had. Let me see. Maybe we just look at the share. Yeah, I can't really see it, but the question itself was something like this. So if you have a move from a low to a high, like which structure or which let's just clear hide all of this. So if you have a move that's happened from a low to high, which breaker structure itself is valid in the first place, and which one is something that you want to like focus on and consider as your POI. So these lines are like two alerts that I have on BDC. So the alert that's on the top here is the higher time frame value very high, which I'm potentially looking to be shorting if we get the potential rejection from there. So which itself it says it's like rejecting from here, even though it's like holding lows. So likely it could potentially compress a bit here. Price could likely do that, and then eventually run up, take some highs, and once we reclaim back into that Valkyrie high is where I would be looking to short, right back to the lower POI. So the question itself was to understand break structure and which break structure to choose in the first place. So first you have to understand extremes in order to understand break structure. So obviously on a price time chart, price on the x-axis, like time on the y-axis, whereas the y-axis is always independent of the x-axis. The price moves in two ways. It either like moves up or it either moves down, and it only does that in a trendy way. Where it doesn't move up like this. It obviously moves up in trendy structures. That's how just like price moves on a price time chart. And to understand where it has like moved from and till where has it moved till, that's what I am referring to extreme points. And the extreme points here could be this, the swing low of the move that caused the entire move up, and the swing high for now. This could obviously like break maybe in the next hour or maybe after that. But for now, we have this as a swing high till where the move has topped out. And which break structure am I even interested in looking at and trading itself? And obviously, the three things, there's like three rules to understanding this break structure, extreme, and POIs as well. The first is you mark out a swing low and a swing high, so you know where the move started from till where it went to. So that's the first rule. The second rule is to mark out an extreme POI, which is obviously going to be around this level. And extreme POIs I have explained like in many sessions, many times. And it's in the videos channel as well. So POI itself is like a combination of like three to four things, and that's like first of all, obviously you are marking extreme. That's the first thing you want to understand about POI. This here I will never consider as a POI because like it could potentially come up here, but if it starts to reject, it is likely that it goes to the other extreme. And that's where the topic of high-low hold as well comes from. And I will explain that later in a bit as well. And the first rule to marking out a POI in itself is to look for extremes. That's the first rule. The second rule is to mark out order blocks. So what is an order block? The last move down before an impulsive move up is an order block, and the last move up before an impulsive move down is also an order block. And some may argue and consider that the last bullish candle move up before an impulse move down is also an order block, and the last bearish candle down before an impulse move up is also a bullish order block, which is pretty much correct as well. So assuming that we have that like or a block right here, we can mark that out. Like the last impulsive candle down. This is on the 3 minute. If you go to the 5 minute, this should be like one singular candle here. So the last impulsive candle move down. And if we mark the zero point 0.5 of that order block itself, it's going to represent some equilibrium. And that's the first second rule. So for the first rule is to mark out extremes itself. The second is to mark out order blocks and a zero point 0.5 equilibrium of those order blocks. And third is to find some level that overlaps that level. And that would be in price action terms, we would look for something similar to an order block, which would be an FUG, a gap. And I see some gap that's like sitting right here. And I would just like extend that gap right there and like close and anything that's like close to the zero point 0.5 and is overlapping. So mainly you want to look for something that's like overlapping those two levels or close to each other. So this here is pretty much overlapping each other, just a minor difference. And I'll mark that out as a POI for me. And the other thing that I look for, so now that we have like validated three of our conditions to mark out a POI, the other thing I look for is like volume profile, which is usually what I look for to mark around the order block until that FVG level itself. And we have like a POC that's sitting there on that consolidation right around this level as well. So we can like extend that level right there and then mark that out as POI itself. And let me just like extend this here and then hide the drawings here. All right, so this here is now my POI. So going back to the three rules of just like understanding a trendy move, how to like play it is first of all understanding that we have like marked out extremes themselves. So that's the first rule. The second rule is to, sorry, the first rule is to mark out the swing high and swing low so you know what you are trying to trade and what like is the level in premium or is it in discount? And if you just like draw a Fibonacci from the bottom of the top and then use the zero point 0.5 of that, anything that's like above zero point 0.5 will be considered as premium. That's not where you would be looking for potential longs much higher. And anything below the zero point 0.5 is considered to be a discount. This is pretty much the basics of like understanding structure itself, and this is why it will like answer the questions about break structure and high and low hold itself. And below zero point 0.5, it's pretty much like a discount, and this is where you want to be like looking for longs, and this is where you want to be looking for shorts mainly. And if you are looking for the opposite positions like longs in premium or like shorts in discount, then you have to see a very certain type of strength, something that could replicate something like this. That's like just no sort of rejection or any sort of like breakdown or reclaim of some prior level. It just continuous grinding into that specific trend. And this is what you want to be looking for if you're trying to fade these to certain value levels. Okay, now that we have like covered like the two rules of the three rules, the extreme, the POI, and the swing points. The third is to like observe what current market price is doing. And what is current market price doing right here? The third point is to just always consider what the current market price is doing, which currently, if you just like look at it, it's broken this high and it's like forming somewhat of a trend for now. It's like made a low hold after an impulsive move up. It's formed a low. So this here is a bit too early to recognize if it's doing some sort of movement. And by the time we break that certain high, come back here and hold a low, which was a long that I took, and I've like done partials around here because we didn't really break above the high is by the time you're here, you will be able to recognize what actually price is trying to do, and you should be able to like trade it. And what it does is like it comes into another POI, which if I just like delete it here and we zoom in a bit here. And why do I like call this POI as well? So there's like two mainly POIs that you want to be looking for. Obviously, the second rule is to always mark out the extreme. The third is to observe what like the current market price is doing. And even in the current market price, you can consider these as POIs because the last move down before the continuous move up is an order block. And if you see there's an FUG, so that overlap there itself is a POI to me. And the thing about holding of those, so the question that Giga had in the chat as well, that we have like a low hold here, which would be like too early to assume if we were, let me just like replay, use a replay as well, so it's a bit easier to see what's going on. Let's just do a replay by the time you're here. Right, so by the time price is here in itself, it's a bit too early to recognize or even say what price may be doing. You could pretty much assume that okay, price may as well just like have like S&P this level, and you want to like go pretty much short here, which isn't really ideal because of the way there's like actual bid coming into this level. This is not what you want to look for when you are trading an SFP. When you're trading an SFP, what you want to see is a quick and continuous bleed of price, which is something like this, a continuous bleed of price, which obviously is like is a very strong move, which just represents that a lot of people who had the will to buy above this level had been faded and they were not able to reclaim above that level. So their buys are just being faded and there's like nobody who's buying market anymore. That's where price is bleeding down. And it's likely all interest in buys has been lost right above this level. And we are likely going to liquidate any buys who are coming in. And that's why we'll move much further down. That's how mainly SFPs themselves work. And if you see stalling of price like you see right here, where it where it was potentially just like nuking down, but it started to stall, which also obviously represents that okay, there were aggressive sellers that came in right into that high. All right, that's something we could observe. But at the moment we came to that level where it should have had just sold off right away, it got stalling. It got like passive bidders coming in again, and then it like broke that specific high right there, and that's where you don't want to be shorting anymore. And this PA is something like there's not much development right here on current market price, which is always the third rule. Since you have like marked out swing lows, swing highs, your extreme POI is like far away from this price. So you only want to be observing what's happening on the current price itself. And we don't have much that's going on the current price. So we're gonna wait out a bit and then see how like price itself develops and then try to trade that more. Right here, you see like there's no sort of like breakdown on that low right there, which is just like confirmation. Okay, this was not the aggressive selling that we were potentially looking for to be trading. Okay, so the previous high was like around this level somewhere, the high from the left, and you would see that okay, it's like breaking down, and then you see this low hold, and this is not what you want to be looking for. Again, you have to understand the very simple rule of trading structure. So if price is really bearish, it should just keep nuking in itself. It should not hold any sort of like lows in the first place, because if price was really bearish, it should just have like broken that low as well, right? So this hold of low, it just represents exhaustion, which just means, okay, there were a lot of aggressive sellers here as well. By the time we got here, we have likely hit some POI. Obviously, always in a long POI does this sort of like structure happen. And if it does happen in somewhere in the middle, it's likely that it could potentially be a fake break structure, which happens most likely into an FEG, which is just like a fill of an FEG, which if you're watching a 3 minute, you may think that it consolidated a bit into that FVG, like it consolidated a bit into that FVG. But if you go to the 10 minute, that will just like look like a wick to you. So that would be pretty much an FVG fill instead of a break structure. And that's likely what happens in like middle of like two structures, which is like the swing high, swing low, swing high, and something in the middle that's like chop and compression and just like irregular price action. That's what happened around the middle. That's why I'm always observing extremes themselves, as there's a lot of bid and ask imbalance just sitting on those levels. So it's much cleaner to be trading those. You don't want to be putting yourself in a stress of just like managing position and not understanding or being tense over them. So you just want to let the market do its job. As for what we were talking about, like this is what represents the a low hold. So if price was really bearish, it should have just like broken down right from this low. Any sort of like low hold just represents exhaustion of sellers in this case. And if I play that a bit more, and I think we pretty much like took the high here, and that's obviously a representation of like a break structure. And by the time we come back here on the low, you may think, okay, this could potentially price could potentially try to like what price could potentially try to do is like price may have like trying to try to like SFP that high once more, and maybe this is the time we come back and SFP a bit lower. But you have to see that it held the lows again, which I don't think it like moved here. It came back. Yep, it came back, and by the time you're here, you would be you if you were like observing price itself, you would be like, okay, this potentially is Quasimodo. This is something I would be like looking to short because like I came to an FUG, it rejected off. But you have to understand that if you are marking a POI, basic concept, you mark the last impulse to move down before a move up. C for an FUG that's overlapping around the zero point 0.5 level. So we do have that level that's sitting there, and we still haven't broken a significant low at the current price. So going back to the three rules, we have the first market swing low, swing high, mark out the extreme POI, second rule. The third rule is to look for what current price itself is doing. And what in current price you want to be looking for? You want to be looking for high hold, low hold, a trendy structure in the first place. And the reason why my focus is so much on trendy structures themselves is because they're so easy to trade that the market just does the job for you. So if I'm longing here, I don't have to worry about like anything. I'll just wait for the market to trend more, and it will eventually give me my TP and make me profit. I don't have to like tense over my position. Like if I'm trying to short here, I'm not looking at order flow. Sorry, I'm looking at order flow. I'm looking at all these things. Okay, this may be the rejection where it marks the top. Okay, shit, this wasn't the rejection. It's holding lows again. I'm closing a trade on loss. I'm shorting here again, and I'm like, okay, this should be the time where it rejects. I'm looking at all these factors. This could potentially lead to a breakdown, but just observing price, you're like, okay, it's holding the lows again. Boom, you're stopped again. So just try not to like tense yourself over worthless positions, over fades, and just like let the market do its job for you. And that's why I tense over the trend itself. And by the time you observe this here, we have a POI that's sitting here. You may not take the long right here on this like move up. You may wait for a better entry, and it definitely came, which was what I longed, which around I think by the time we are like holding here, we did like come around here somewhere, which was when I like woke up and I was like, okay, this is the time I want to long, and which that's what I did. And if I like play this a bit more, yeah, we came back to the low here, and you're going to observe that this low is going to like very efficiently hold this one right here. And if you're like trading based on how I'm trading as well, you're just gonna focus on this low here. And obviously, if you're bullish, we're into a POI, we should like hold this low and then like chop a bit more and then continue higher. And this was where my entry itself was. And if you do play this a bit more, that's like where the low continues to hold, and that's where it does go up from afterwards. And I think I do partials around here just because we like SFP'd an internal high, and we are pretty much compressing here. The best trades do not come from like start of compression. Like this here is just like I think an hour worth of price action or 2 or 3 hours worth of price action. The best trades come from either a very continuous trendy move up where the RR is too high, you long here, put tight stops is going to likely work, or the best trades come from after that initial compression or range has formed and you get like cleaner POIs to trade and they just like start to compress and low hold, high hold are very easy to recognize. So these are the two conditions where the better trades themselves come from. And if I delete this here, so the trade in itself was just like observing again the third rule in itself, observing current market price action. We took along here, pretty much like TP partials right here, and go risk free around maybe here because it could potentially come back to this level here. And likely, if it does give like one more low hold, it's likely that goes to the hard time frame value area high POI. And let's just see what's uh, going on the current price action. Yeah. We're pretty much just like compressing a bit, initial compression before a clear trend or somewhat of a compression is made. That is like we are holding highs, we are holding lows as well. So pretty much the only thing that you have to do for now in observing this price action is either wait for a low hold to take your trade right there or wait for another sort of like high rejection and then take a short. So that's all you can do in this price section, and I don't recommend more. And the thing about break structure and which break structure is in itself correct is like two things, and people mark them wrong a lot as well. So from a move down to a move up, we could consider this as a break structure, this, and this as well, and this as well, this as well, maybe even this as well. And which is the correct break structure, you may ask, like, and the fourth step in itself is recognizing that through current market price action, and the first break structure that represents strength and fade in itself, like obviously we are trending up for now, and the first break structure that will represent that okay, it's not top now and it's likely to go much lower is the break structure that's around the current price action itself. That would be around this low, this higher low right here. Just a few minutes ago when price was here, this was the higher low that would represent break structure. And would you really be focused on trying to like trade that break structure if you do get that break structure? And a rule of thumb is to understanding two POIs whenever a break structure has happened. And that's like if a break structure has happened, you want to look for two things. You want to look for an either a high hold around that area. That's your first PI you want to short after the break structure has happened, or you want to look for strength in that current break structure level. So if you have like broken structure here, and we are somewhat just like grinding down, which I think I've like shared so many examples in chat and in like alpha section itself. And if you see that sort of just like bleed down below that break structure level and no reclaim of that break structure level is where you want to just like short right there, put your tight stops around the break structure level in itself and look for an instant retrace. And if it starts to do like an instant move up, and that's where you want to like completely close your trade right here. Because always you have to understand the extreme POIs are always significant and they act as magnets themselves in the first place as they're more significant. And why would that be? Let's just assume price did not really break down here and held low in the first place here, and you're like, shit, this is not what I was looking for. I was looking for a continuous bleed down, where I would be like looking to short just market right there. And let's just say that this low hold and we come back into that level, it just now is a representation of somewhat of a range. You cannot be sure that this is the top right there until there is rejection from that specific high, which represents, okay, everybody who's like now trying to buy above this certain level is like pretty much being faded, being rejected right here. So this has now pretty much formed a local high, a local top, and that's when you want to be like looking for shorts themselves, and that's where the high hold and low hold importance comes in as well. So whenever price does a break structure, you can either enter on a slow bleed down, but the better option is always when a high hold instead, because that's when you recognize, okay, if again, if price was really bullish, it should have just like continued higher the way it did before, right? Just breaking highs, just holding highs, just breaking highs. If it was really bullish, it should have just like continued doing that. Why did it even start to exhaust in the first place? It's likely buyers are exhausted and we are in for a retrace to some POI below. And that's what you mainly want to look for: high hold, low hold. And how to actually recognize a high or a low hold. If you're just watching price action in itself, the only edge that you will have is lower time frame candles, and you won't have like an edge anymore. The edge would be to look for 3 minute to 15-second candles, and that would just be that you see, okay, price come right into this level, you're looking for a bullish hold, low hold. So you would want to look for a reaction that closes into a green candle, and similar for here, and something that could represent somewhat of a move like this. Again, this here, it represents a bit of a TVAP after a move down. Something that could, if I go to the 15 seconds here, is what is represented by this level here. Right, you can see from here, this is what represents somewhat of a TVAP. That is just like, okay, there was some sell momentum from this position to this position, but some bids do have come in, or this could potentially be a TVAP of shorts closing themselves. And this is what you want to potentially look for when you're looking for a low hold in itself. Or like even you see here, this is what you see right here, same structure right here, same similar structure right here, or something that could represent something of a move like this. Just this here is what you want to look for on the lower time frames to recognize a low hold just on a candlestick chart, right? Or a low hold could also be represented by a quick move, but I don't really like to trade those because most of the time you miss your entry on that quick move. And even on that quick move, you want to be looking for this sort of structure right here on the lower time frame. And this is the 15-second. On the 1 minute, it would just like look like a bunch of like candles after like an impulsive move down, right? Something like this. So this is what you mainly want to be looking for into recognizing a high or a low hold. And it's just vice versa for high holds, which I could show you here. Uh, right here, if I delete this here. It's just a recognition of, okay, we have like formed a high. Usually high holding structure are more aggressive. So they would have like a move like this, then a move like this. That this is how like most of the high holds are. First initial move, then there's like second initial rejection. First initial move, second initial rejection. This is how mostly high holds are, because sellers are always aggressive as compared to buyers themselves into exhaustion levels, obviously. That's why distribution levels are either a blow off top or with an SFP and then continuous bleed down. But accumulation levels are much more um, chopish and then like roundish in structure in itself, something like this, right? So just understanding the different that very minor difference in the nature of buyers and sellers themselves could potentially help you as well into understanding price action and just price movement in itself in the first place. And that was the topic on just like understanding of the high and low hold. And the other thing, I think I could probably clear this up as well. The only two break structures that are significant in from this level to like this level are, first of all, is the one that's closest to the current market price itself, which is like CMP, current market price, the one that's closest to the market price. And obviously, you don't want to be entering like an ape right there, or you never want to like enter at a higher low like an ape right here. Like you don't want to enter like a short here because the low could hold and you could be liquidated right away. So that's pretty much stupid. And now that you understand, the first significant break structure is always the one that's closest to the current market price, and the second that's significant is the one at the low itself. So anything that's like from here to here has no worth. This is all just like uses to me, and it's anything that's in the middle. I am not looking, and I have like no interest in trading in the first place. I am the only thing that I'm looking for when I'm looking at this chart is I'm looking at what current market price is doing, where the break structure is closest to the current market price, and how price will react after doing a break structure in itself. So if it comes here and it starts to slow grind here, then this could highly be a bait, and it could have like been okay, this slow held as well, so I'm not interested in trapping myself. So I'm always looking for that sort of like rejection or reaction. The only thing that matters here is the sort of rejection or reaction price gets after break structure. And if it does get that rejection reaction there, you want to be positioning here or either here, right? And these levels just are insignificant to me. I don't really care about them. And the only thing that matters is the other extreme now, because they act as magnets due to various reasons I've explained many times. And like first of all, we have this significant level here, then this significant break structure, right? And why are these like levels insignificant in the first place? And would I really look to trade them anytime? Yeah, I would look to trade them when they get somewhat of a reaction or somewhat of a bid from those levels, and it will be vice versa in short levels. So if you do come to this level, what's stopping it to go to that other extreme would be like would be like irregular bid coming in to those levels. So let's just say we come to this level that's like not significant. It's just you shouldn't care about these levels. And when it does come here and it starts to like sort of form a low hold, and again the third rule is to obviously observe market price, current market price in itself. So the first rule is mark out swing low, swing high. You have the second rule as mark out your extreme POIs, and the third rule is to obviously always observe current price. And the one thing that like does not matter to you will start to matter only when market price in itself is starting to form a low, and something that makes you bid and front run your extreme POI, which is the second rule in itself. So the fourth rule is to observe like price action, current market price at certain levels, which makes you front run the second rule, that is the extreme PI itself. And this is what sometimes happens, but that's why the fourth rule in itself exists in the first place. And this is how I am currently looking at just like understanding from a step-by-step analysis on how I'm training both extremes of moves. I'm training break structures themselves, and how I'm training high hold and low hold themselves as well. If anybody has like any questions, you can let me know in the chat. Sorry, can you tell the rules once again? The rules would be just like four rules, which I think I uh it's explained for quite a while in the meeting now, which would be the just the first rule is to mark out just the wait a minute. So mark out just the extreme like swing highs. First of all, first is to mark out swing low, swing high. Then the second is to mark out extreme point of like interest. Even this is like an extreme point of interest right now. And the third is to just like observe what current market price itself is doing. And the fourth is to observe what market price is doing in the middle, so you would be able to know if it's like front running your second rule or not. Yeah, you can also watch the replay. I will share you guys the recording later as well.
Shinny,
Yeah,
you took a long from 67K the other day, on the 28th
around here.
there.
Yeah,
Could you explain the low hold there? Because quite often you don't get breaker structure, you just get the low hold, and it's obviously looks bearish until the low does hold. And how do you determine that
yeah,
when
yeah,
you're going to
definitely.
take that long?
Yeah, all right. So if you do go back to because this will be very biased. Let's just see what price is doing right here right now. Looks pretty much. Where did it go? Okay, so this looks like pretty much cooked right here. Uh, that's why I like aggressively partial here in the first phase. Uh, Potentially just like in my opinion. Let me move this here. Move the chat here. Go to lower tempo. Okay, so what we could potentially do is obviously get a retrace into what timing is it? Into New York session, and then eventually, I pretty much I got close break even after aggressive partials here. And what we could potentially do is like come here into the low, or if hold is low, I would still say that it's likely that it comes back up here. And if it doesn't, it's likely that New York somewhat picks it up after a break of these lows. And if I do like move back to the level here, I think my long was around here somewhere. Let's just play it from this level after that move happened and remove somewhat of these ranks. Okay. How to increase this? Right, so by the time price is here, you like obviously first of all you have to understand that we are in like an extreme POI for me. Let me delete this here. For me, we're pretty much into like an extreme POI, extreme of a move. If I just like zoom out a bit, so what we are looking at the chart here, we have a swing high, we have a swing low, and we are in currently in an extreme POI, which I could consider this whole move as well. That could potentially be a level for holding lows. We did hold a low, which I didn't really get the catch on this, but I did get one right here after we like SFP this low. We are obviously, again, what I told you is to observe price action and bid that looks like this after an impulsive move down, and that's what we did. And after that, we are just like coming into that FEG full and potential low hold level right there on this chart here. And if I do play price action itself, we do get a rejection, I think. We don't break the high there. And by the time you're here, like you would think, okay, this could potentially be like very bearish, because it's like holding highs as well. It's holding highs as well. But you want to understand that if this low holds here and it starts to like does that sort of structure, then this low hold will be much more significant than the high hold in itself, because we are overall in a long POI. We are overall in the first and second condition of our understanding. We are around a swing low level and we are at the extreme POI itself. So any sort of low hold will definitely outweigh any sort of like high hold. And obviously the structure we got afterwards was pretty much like a grind up after this quick move down. And that's what I was like looking to bid. And if I do play a bit more and delete this here. Yeah, by the time prices done this break structure is I'm pretty much interested in price right now. And I think my long was probably around here as well, around here, because the way the price held. So first of all, we are filling gaps right here into a low hold and low which is already held, and we are breaking structure, breaking that high hold, just like bleed down. We didn't really do that because we broke structure right here. And this is where I recognize, okay, this is strength into like validating our first and second condition. This is where I went along. And for just like, because I wasn't watching charts and I was outside, so I put my stops like very wide and I just like went out and put my TP obviously above to the other extreme of the level. And then I just like went out, and that's where I saw this slow hold as well. So this is where you want to see or you want to position yourself. And I think my position itself was around here on this low or this low as well. And once you see that sort of like low hold is where you recognize, okay, the thing that you were looking for has happened, and it's likely that it goes much higher. And there's like no sort of pretty much breakdown, and it's just continuation of, okay, bid, continuation, more bid. It's just going higher, right? You have no reason to be looking to short or not enter longs here.
Yeah, what I used to do was that first low. I used to long that, and then it would still be bearish and keep going down. I think a lot of people do that.
Which low? You can annotate
Um,
the chart.
yeah, so I would long this,
Right.
and inevitably it would do something like this and come back down again.
Yeah, that's something that obviously happens. I won't like deny it. But obviously
Yeah,
the confirmation itself was after this high broke, and that's where my entry was right. Just to
yeah,
avoid that scenario of like it going down from there is why I waited for this specific confirmation. And luckily I woke up around that time and I had that confirmation right away.
yeah, definitely.
And
Yeah, no, that's cleared up a lot. Thank you.
And even here, like you see that there's no sort of like low break, none at all, and we come by the time here, and by the time you are here, like you can TP partials anytime. It breaks maybe here, it comes back into an SFP here, or TP partials at this internal liquid high, which could potentially provide some sort of rejection and just let the trade in itself develop because your POI is like pretty much above. Yeah, you can TP partials right here on this slow bleed, and but even after that, it doesn't really break down until it gets rejected right here which if I could show you guys like here by the time you're here we are pretty much trending higher and higher breaking highs and we're holding lows until the time comes here where it doesn't break higher because you see from all these low holds, whenever it holds a low, it's breaking the previous high, and only during this like low hold is when it didn't break that high, is where you want to recognize, okay, now there's weakness in the uptrend, and this is where I want to aggressively TP partials right here. And even here, after this certain rejection, you could have done TP partials, but overall, it pretty much like held lows and then eventually ran up because obviously we were in a pretty decent POI and we were likely to go up on a Sunday. And that's pretty much the train in itself right there. And I had like no reason to close it because the POI was good, the entry was good, and you would just like not close that sort of like trade break even because some rejection happened. And you see here like even here like this here is a good long in itself. You would see that okay, this type of structure is what I'm talking about. Like around this structure is what accumulation is represented by most of the time, and you would see that okay, this is what exactly is happening here. There's a lot of aggressive sellers just like coming in right away, but there's like no sort of breakdown of any structure right here. And it's where we are even slowly grabbing momentum from a move that's happening like this, that's going down, aggressive sellers, and we are starting to stall a bit, going sideways. This is where uh, passive bids are coming in or shorts are closing and it starts to like go up and gain momentum. But this is where slow grind is happening. And that is what represents like an accumulative structure for buys, which talk about like a lot of time, as compared to sells, which is like much more aggressive, which is like blow off tops or like just slow bleeds after some certain rejection. And this is like exactly what happened here and like formed a low and just like pumped up around here. And I think that's what happened afterwards. Yeah, pretty much that's it takes a high here. That's where you like on this second rejection you TP more partials and it comes back into some long POI or hold low here and eventually run backs up. Yeah, and by the time you're here, like this here is another long setup where again, yeah, I tell you that you have to recognize this type of like structure and rejection right away. So you see that sort of like low hold is aggressive slow grind here. You want a long there, and you want to like TP when there's like actual rejection. There is none around here. So you get SFP of this level, you get a low made and you come back to this level but you reject off to that level is where you want to recognize okay, this is like slowing down again, and this is where you want to aggressively partials, and you will see that price comes back into an FVG overlap, which if I show you right here, like the last move down, if you draw that here, and if you draw an FUG that's sitting there, and obviously it's a bit further away from 0.5, but like it's overlapping our block to somewhat extent. That's your POI, and it price like aggressively holds a low on very microstructure, and that's where you want to potentially long again, or have some limits at the 0.5 as well, and you let the price run again as well, and it eventually just runs back up. And this could be a little bit biased because we obviously know what price did on BTC itself, but I just want you to like understand that it's like very useful what I'm like trying to share with you guys right here. And eventually it does like hit the POI that's like up, sitting right up here, I think. Yep. And that's where me and Indy went short last night, and it was like a short around here, and I did have like my TPs right around here, but I did some aggressive partials around here, but I went to sleep. And what happened was like it came down a bit, but it like front run my TP. Yeah, that was a very unfortunate front run right there. And I wasn't awake to like actually manage it, so I had to be close, like break even on a 30% runner. How much should we partial on every TP level? Asked in chat. Okay, so it actually depends on the trade itself. So if you are trading like let me close this here. It depends on the trade itself and how the market is forming around the trade. So let's just say let me zoom out a bit here. So let's just say I have like a long from these levels, like I know that I've long from around these levels, and my TP was here in the first place, and I was pretty much confident into because the POI in itself was very good, and I knew that okay, this is likely going to hold the lows, and let's just say okay, this was my entry and this was my TP right here, and my stops may be around here or like here, and by the time I'm up like 2 hour, I'm always doing like aggressive partials. But since the POI in itself was pretty good and was like pretty much confident that it's going to go to the higher POI to reject in the first place, and this type of PA just like help me recognize okay it's going much higher. And what I would try to like do in partials would be on a confident trade, on a trade that I have high conviction on, I would probably do 30% because I would know okay it's likely that it's going to hit that TP eventually, so I would do like less partials to avoid running out of like profits. And if it's a trade where I am fading, or if I know that okay, this is like still grinding down, but it held a low here, and I'm like longing here, fading the entire trend is where I'm like okay, this potentially may reject here again, or even from here. So I'm gonna close like 70 to like 80% of my trade and wait for a better re-entry, or wait for the price to like break structure and then eventually enter on a continuation trade, right? So my entire system itself is model after however price moves. So I can enter here as well. I can enter here as well, here as well. I can enter shorts here as well. I can enter longs here as well. So I have like really no care of like missing any sort of moves because I know I will come to the chart, I will look at it, and I will find somewhat of a trade. So and I will eventually take it. And that's why like I am doing aggressive partials most of the time because my trade frequency is like a lot. Like I will take maybe 10 or 5 trades a day. And if I'm not doing that, or if I'm like only taking one trade a day, then like taking too many partials will obviously not lead to a very big P&L eventually, because you're taking just like one trade, and if you're aggressively doing like partial on that right here, then obviously you're missing out on a lot of profits. Do you follow certain sessions time? Yes, I do. I do actually. I do actually like to trade like New York session a lot, New York session, London session, and I've shared many times in chat that you want to avoid pre-close session. So if there's like 4 sessions, like Asia session, then there's like London session, then there is like New York session, then there's like close session. People call it pre-close, pre-open session. That is just like before Asia session. this session I would like to like avoid most of the time because Forex is closed as well, and prices pretty much are just like rebalancing in this session because major markets themselves are closed, right? So price just rebalancing, and there's like illiquid movement, and price could move like this or this, and if you're not positioned from New York session, you're likely to get caught offside on this eventually. So these sessions are like the first three sessions are very helpful and very easy to trade, and that's where you want to be like focusing your time on. Sorry, what time is pre-close session? I think it's in around, it's like 4 4:25 for me. I think it should be 5 to like 7. It's in 7 hours and 30 minutes, or around 7 hours. Maybe 11 a.m. Oh, sorry, 11 p.m. or 12 p.m. my time. Yeah, the low hell, yeah, Serena watched. Yeah, yeah, if you see here, like I don't think, yeah, it did not break any sort of like low hold here. And if it does reject from here, we are likely just like gonna compress, form a slow grind, and eventually take that out. Does anybody else have any questions? And was I able to like answer your question, Pokemon and Giga?
Yeah, yeah, it was good.
Right, that's great. Right, if anybody does have any more questions, you can like let me know in the chat, and I'll put up the recording of this session as well. And like I hope the session helped and I was able to answer some questions.
Cheers, mate. Thank you.
Right. Maybe let's look at Dodge. Okay, let me see. Where is Dodge? Where is Dodge? I think this, yeah, this here is Dodge, and that ETH too. ETH actually looks better. Like by the time ETH was here, it was looking pretty much like just wrecked. But by the time we like come here, hold this so, it's like looking somewhat decent now as we're reclaiming back into prior value as well. And it could potentially do this with BTC tapping, I think 70.4. Dodge also looks somewhat decent here as well. Let's see. But Dodge is like pretty much compressing here, right? The only longs were on Dodge were around here, and it's just like compressing here. So if it rejects here, I'm pretty sure Dodge comes around this level here, and then you'll have to pray that it holds this level. Solana, I just like use Sol personally. I just like use Sol as beta to trading BTC. So if I as a person am trading on Bybit without a VIP account, I would not trade BTC. I would rather trade like Solana all the time. And if I have like any sort of exchange or like broker that's offering me very bad fees for BTC, I would just like trade Solana for that. Much cleaner moves, and the percentile moves are much better on those. How do you do your pre-market prep? Kizashi asked. Market prep. I've actually if I was a beginner, then I would do like market prep. Just like look at market, what's going on. But the thing is, like I have like these levels marked for so long, and I know that okay, price. The only levels I'm interested in is either the lows for longing or the highs for shorting. Anything between is a scalp. And if I am like positioned obviously long from around here, I don't need to like observe for or wait for reversal from anything within the mid. It will eventually go tap my higher level, and that's where I will look to close shorts and longs. So I just like have these levels marked out before the week, and then just like go to the lower time frame and keep on scalping. What about MKR trades? And what about MKR? What TPs are you currently looking for Soul? MKR Maker I'm not looking at. Soul we could observe. Like, if you go to the hard time frame, let's just see what Soul is doing here. And if I do look at Soul, Soul somewhat looks like it's over as well. I think actually I am pretty gig along on Soul from around here. When GCR posted from like here to this level, I have like huge bits around uh, I have a huge like spot back from 129 to 132, and I pretty much shared that and chilled that this entire like May, April. I was just feeling okay, we are longing soul, and after that I just did not look at it, and I'm still in that position somehow. My TP actually was like 260, 280 for that, but if it like rejects from here, it could very likely just represent to me, okay, this entire move up was an internal liquidity grab, and we're likely to have like 150 again. So if we do like reject from here, it's pretty much over for Soul. And my long was around here, and everybody who has been in the Discord from April to May would know that my Soul long was like this, 290 to 80, and we bid like when GCR posted as well. Soul, I think AVEX as well. Sol, AVEX, and BTC. That's what we like a bit. Ethereum a lot as well, and we were just like holding those trades to higher or TP partials. If a scenario like this happens, like if we take internal liquidity here, then a very good trade would be to like short put your stops at the high and go for like a 150 move from 190 like this. Which I will obviously wait for the high to be reclaimed and rejected, obviously. For now, this area is just compressing, and it's better to just like hold the trade that's like from here, and just like chill until there's somewhat of a break from this range, because you don't want to be trading initial compression, which is this here is initial compression, which obviously leads to two things, and that's where most people get confused. Initial compression either leads to somewhat of a slow grind eventually, or it leads to like distribution depending on how it's forming after a while. So you want to only like observe and try to trade and aggressively TP whenever a move against your trade happens in initial compression. Well, how do you trade pre-USA session? Like, I'm not sure what you mean, like 8 #0? 8:30 New York time. Like 8:30 New York time would be different for me. I'm not sure where you are. USC +4, okay. Okay, 8:30 it's right now for him. Let me see. Chat. Where did the chat go? Okay, 8:30 is like 8:30 is time for him. Pre New York session, you mean? I would usually there's like volatile moves into New York session, and obviously since we are like a position longs from around this level, and like I didn't completely close my trade based on the low hold that was done here. I would obviously like hold my trade, depending on like some reaction that comes here or maybe here, and obviously there's like usually a move that's happening right around New York Open, and that's something that I'd like to trade if I'm positioned in a decent like position from London session itself, or if I'm not, then I will just like trade continuation into New York session. That's like helpful as well because it's a volatile session and it's easily tradable. Shiny, do you trade on props? I used to, I don't do anymore. I manage my personal accounts. Looked as much on ICT set. ICT setups, I'm not sure. SMT divergence I know. Anything else like FVG I know. Anything else I don't. Actually, may I know what is initial compression? Initial compression is exhaustion, which is just like represented after an impulse move. So we have an impulse move from here to here, a move that's like a quick move or cause huge discrepancy in price itself, and after that it starts to slow down. That's what is also exhaustion and initial compression. It's a bit hard to trade, but if you recognize it and know how to trade it, you will obviously get good trades. But the better trades are always after it starts to form one or two highs and lows. That's where you recognize, okay, this is holding highs and lows now, and it's easily tradable. So exhaustion and initial compression is just like move till like this, where it's just forming if I do the replay button or a bit more, I don't know how to like replace like bar. Till here. So we have like formed this here is exhaustion and initial compression. So after an impulse move, by the time you're here, you're a bit unclear about what could potentially happen, because again, the third rule is always to observe like market price in itself and current market price. So it's a bit hard to tell. It could be like if it rejects here, it could go down or what could potentially happen. Even though it's holding lows, obviously it's going to go up, but it's a bit hard to just like understand what's like going to happen on initial compression and the exhaustion move right after an impulse move. So I recommend not to like ape into trades here. Like even though I usually do, which is like very low risk, and this is where like most of my losses themselves come from. Yeah, 70, it would be like very retarded if they like reject from around just front run like 70K number. That would be very funny. Let me mark 70K number is from here. If anybody isn't along here, I would recommend that you can like try to take partials and then just like wait for like a quick move up, and it could that quick move up could potentially go from anywhere around like 70.2 to like 70.8. So I'm just like observing for any quick move up, and then let me see if I can go to the hard time frame for hour here. What is the chart? Oh yeah, any let me delete some of this here. And where's the short tool? So I'd be much like interested into like shorting this after it comes into this here, 70.2 to like 70.8. It comes into there and it rejects and it comes back into the higher time frame value area high, and that's where you want to try to short. But it's just that these highs have like held so many times, one, two, three, four, five, and this would be the fifth time. And mostly on most time on the fifth time, it's likely that it like just gives a blow to those highs. So I'm interested into shorting when it reclaims back into the higher time frame value area high, or when it like SFPs like 75K or the 80 itself, and then showing back to the value area lows. And to hedge these positions, I'll just like hold the loan from a bit lower and just like chill and wait for how price will develop. And right now we're just like front running 70K number, and the way this rejection has formed, I think it gives this. And a front run of these round numbers, I usually short a lot, but I didn't like ape into one position right here. Is Asia in the call? Yeah, it was slow run, yeah. Yeah, this is the reaction when you see a reaction like this, is you where you want to add to longs and you want to like long because the lows here in itself has like held very cleanly and you know that you're trading into like a impulse move after like low hold themselves. This is representation of continuation. I don't think like anybody else has any question. Well then, if you guys do, like you can ask me in the crypto chat anytime, and I will upload the session later on in the chat as well, so anybody can rewatch and understand what we talked about today. Well then, thank you guys for joining. See you guys later. Goodbye.